Hello and welcome to the first Targets in Focus interview of this trading week. Today I'm focusing on the yen and the US dollar with Alessio Rastani from Leading Trader in London. Alessio, thank you once again for joining me. Now, data on Friday showed that the US economy added significantly more jobs than forecast last month. How much did this have an effect on the dollar?
Well, Jennifer, the positive job report resulted in a rally as we saw in the US dollar. There is a lot of downward pressure on the major currencies because of the US dollar gaining strength. Back in January this year, in fact, I predicted that the U.S. dollar would put in a short to medium-term bottom and rally, which it has done. And of course, the implications of this has been weakness in the majority of the currency pairs.
The yen remains under pressure as there are still expectations for more aggressive easing steps by the Bank of Japan. Today, the incoming Bank of Japan Governor Kuroda said he would do whatever is needed to beat the deflation and achieve the 2% inflation target adopted by the central bank in January. What effect has this pressure had on the currency, and what are your short, mid and long-term predictions for the dollar-yen?
I think what's happening with the Japanese yen is one of the most important markets to watch right now. The Japanese government has made it clear, as you've been saying, Jennifer, by their actions, they've made it clear they're in a full-on currency war with the U.S. And we've seen the Japanese yen just getting annihilated. It's down almost 20% since its highs in September of last year. This has obviously resulted in a very powerful upward trend in the dollar-yen pair, but of course in a downward trend in the yen, in the yen itself. So we also know that big traders like George Soros have switched from gold to the yen trade. Over the short term, I'm looking for the dollar-yen pair to eventually hit 100 this year. I actually think that the 100 as a prediction on dollar-yen is a very modest prediction. Long term, I'm looking for dollar-yen to head to 124 and even 150. Now, that may seem like a very unlikely or surprising sort of outlook or forecast for dollar-yen to many people, but we have to look at the bigger, wider context on the dollar-yen to see where it's been before. We need to remember that the dollar-yen was actually trading at 260 back in 1985. So actually 150 in the dollar-yen as a target is not that unlikely, in my opinion. So for me, I'm not looking to load up on a dollar-yen pair yet until we've had a decent correction or pullback. So I'm actually looking for the dollar-yen to be one of the best long trades of 2013, and it's something I'm encouraging everyone, all my subscribers, to get in on as well.
Investors are really weak on the pound currently due to concerns over the prospects for a triple-dip recession and more easing by the Bank of England. Are these prospects dampening your view of the pound?
Well, one thing we have to remember about the UK is that we are still only halfway through the great deleveraging that began in 2008, which means that we have another 4 more years of businesses and corporations concerned with deleveraging, in other words, paying off debt as opposed to more borrowing. And that's a big problem right now in the UK. Whereas we've seen some positive signs happening in the US, a lot of corporations in the UK are more concerned with paying off debt as opposed to, demand for borrowing, which we've not seen that much. So that's actually explains why we've seen a downgrade in the UK recently, last month. So certainly investors are seeing more easing by the Bank of England to try to stimulate the British economy. In the UK, I still think the threat of deflation is still there, and what the Bank of England is trying to do is try to beat the forces of deflation by more quantitative easing. So the British pound, as we've seen, has broken through a major support level, which the support level was at the 2012 bottom at the 1.52 level there. So again, with the pound dollar or cable, any rallies are shorting opportunities. We are due for a correction, I believe, on the British pound. So I'm looking for pound dollar to see more downward pressure and head to its next monthly pivot at 1.4560 level. If we break that level, and I actually think we will, if we break that level and close below it, then I don't see any major support on cable until 1.35.
The euro-dollar is managing to do quite well despite continuing weak economic data. The key argument from Mario Draghi at last week's ECB meeting was that the medium-term conditions were likely to improve. Are investors thinking that the worst is over for the eurozone now and putting a little bit more confidence back into the euro?
Well, again, if we wanted to see any confidence in the euro-dollar last week, we haven't seen it reflected in the currency market charts. So certainly as far as that's concerned, we haven't seen that. It still remains relatively weak. And again, the main weakness in the euro dollar is because the dollar strength we've seen recently. So as far as the euro dollar is concerned, I'm looking for the euro to head lower to its next support level. The first is going to be the 200 moving average on the 200 daily moving average, which is the key level looked at by all the major funds. This is at the 1.2850 level. However, I actually expect the euro will most likely break this level and head to its November 2012 lows of 1.2650, 1.26 half. So that's my next target on the euro at 1.26 half. For the moment, any rallies in the euro are shorting opportunities.
Alessio Rastani there with his short, mid and long-term predictions for the yen and the dollar. We'll be back with another Targets in Focus interview on Wednesday. Take care.